5% tax-free may sound like an April Fool's joke, but it's not. I'm Jack Otter, editor of BARRON'S.com. I'm here with Jack Hough, a senior editor at the magazine. So Jack, when we're looking for investments, you want to try to avoid the hot thing. You want to go to areas that are unloved. Mm-hmm. Municipal bonds, very unloved right now, thanks to Detroit, Puerto Rico, and so forth. And of course, healthcare people are suspicious of, thanks to Obamacare, yeah. Although, of course, that stock market, that stock sector has been the best performer in 3 years, probably because it started at such a low base. So you have a bond idea for us that combines muni and health.
Well, yeah, this is from Barclays Capital, and they just point out that when you look at some of these healthcare issues, that the yields are higher than it should be when you compare them with other bonds with similar characteristics, similar maturities, and similar credit ratings. And this is a good, for a long-term investor. Look, the average over the past half century for the 10-year Treasury yield was about 6.5%, and now you're at, where are you, 2.6, 2.7, so it's hard for people to find.
That's the 10-year.
That's the 10-year Treasury. Now, there's not something out there where folks can get 6.5% on a government guaranteed yield. But here are some high quality muni issues where you can get just under 5 or just over 5 on some of these. And these are AA bond. I think one of them is a single A, some others are AA. So they're pretty high quality issues if you're willing to go out long. These are 20 to 30 year issues. So if you're someone looking to lock in money for larger yields and you're in a high tax bracket, might be some ideas here for you. And I'll just mention the names quickly. Baylor Scott and White Health is one of the issuers. That's the largest healthcare system in Texas. Another one is Henry Ford Health System. That's a large Michigan healthcare system. Lucille Salter Packard Children's Hospital. That's a San Francisco Bay Area hospital. And finally, Unity Point Health. That is a healthcare system in Iowa. So those are 4. Oh, and we've got to mention Providence Health and Services, and they are in Washington. Those are actually 5 issuers mentioned in the Barclays note. We'll show those on the screen for folks with some maturities out there and maybe some yields.
And importantly, this is tax-free. So the tax-free equivalent, depending on your tax bracket, is going to be more in the 8% range, something like that. So it's really attractive for people. Now, you probably have limited credit risk. There is credit risk, of course. There is anytime.
There's some.
What you're looking at more with these long-term bonds is probably more an interest rate risk.
Interest rate risk, but I think if you're someone where you know the income you have to produce over the next 20 years and you're putting this as part of your portfolio, I mean the yields on these are high enough that you lock in this income. I think you kind of know what you're going to get. Check out the issuers and check out their credit ratings and look at their balance sheets and financials. But the folks at Barclays say these bonds look cheap relative to other munis, and munis seem like a good deal relative to other bonds.
Thanks very much, Jack.
Thanks.